and have our stops extended a little bit. So that's where we're at right now. 2 3 points seems like it's a doable number. Again, when volatility picks up and craziness affects us, and you never know when it will, you never know why it would. You just know that it will at some point in time, because that's just the nature of the beast. Nice there, Paul. You seem to be jumping on that when I was at bond market. You've been catching it pretty good. That's we're just kind of yeah. Well, it did. It did. I don't know if it's slow, but I guess it is. Yeah, I guess it. I guess you could classify it as slow. I still like it when it moved around a little. I just don't like it anymore. Yeah, I'm sure it's not. Look, like I said, I've traded bonds forever, so I know how it works. Except I just don't like the trendiness, one-way trade that it's become. And hey, it's all right. I don't have to like it, but it's somebody else like you loves it. So that's what trading's all about. You have to find the instrument that best fits your trading style, or try to find the one that best fits your trading style and trade along with it. So nothing wrong with that. This is a new term is hitting the financial markets called swarm trading. That's SWARM, swarm trading. We've seen the trend many times over the past year, ranging from GameStop to AMC short squeeze to Hertz, bankruptcy bid up on and Kodak, craze that preceded it, other events that did not fare as well as highly publicized. Dodge Day, which was yesterday. This week was supposed to take the crypto to $1, which unfortunately for my daughter did not. She was very upset about it because she was like announcing it to the world the day before. Well, to the world, to me anyway. The tactic sees people, the swarm trading, the tactics sees people pile into these names, ignoring fundamentals, technicals, and other catalysts until the last trader is left holding the bag. Gee. Meet the newest target, Greenlight Capital. David Enron cited a deli in New Jersey last week as proof of the quasi-anarchy market that is fractured and possibly in the process of breaking completely. The store, located on the Philly's suburb of Paulsboro, generated only $335,000 in sales over the past 2 years, but is publicly listed as Hometown International and is valued at $100 million. Shit, I do that. I do more than that. I'm not valued at $100 million. The pastrami must be amazing, Einhorn remarked as shares volume surged with swarms of traders adding on the Russian dressing. This guy's trying to be funny. All right, we got this number coming out. So it used to be that people ran away from brewing bubbles and other financial assets that seem massively overvalued or just plain stupid. Nowadays, people run towards them. Hometown International, which is the name of the deli stock, was delisted over-the-counter market overnight for not complying with the rules and was slapped with a warning label, according to the group's CEO. The retail trading sensation is also under a microscope, while its effects are being assessed in relation to market quality. that's swarm trading. There you go. We got new words to consider as we trade, and that's true. It's been like goofy, right? These like crazy things that don't make any sense. If you've been trading or even if you've been investing for a while and you're watching this craziness happen with some of these stocks, and that is a $20 stock trading at 500. I mean, that's, come on. But that's what's going on. So the question is it gambling or is it investing? I would have to say definitely not investing. I don't know if it's gambling, but definitely not investing. That's for sure. All right. Anyway, we got a number coming out here in less than a minute. Doesn't seem like the market is really, ready for it. There's like nothing in the ladder ticket that's being depleted. We'll see what happens. The little resistance around the 64 area, which is our pivot, but otherwise really nothing else. There's a little downtick here in the market, and this little number. The ECB report was bullish. Yeah, bullish for bonds. Yeah, those guys. I mean, what can they? What they have to be bullish. They have to keep, this environment going, right? Because they can't have interest rates go down. I mean, go up, bonds go down. All right, so this number was a little bit bearish. I don't know. It just kind of broke off here a little bit. Like I said, I'm not one into jumping one way or the other with it. We'll just let the number come out and let the market react, and then we'll see what happens. Bond market is not doing a thing. Somebody told the bond market that a number was released. Somebody wake it up. Doesn't seem to care. All right, we're drifting a little bit lower here. And just coming back to the 52 area. Again, it's a little range bound. Nothing to get too concerned about. See what it wants to do. Next support level we have is down at 45. Ooh, a little uptick in the bond market. Phew. I thought they were not even aware that there was a number coming out. Just for a second there. Can we repeat the levels in the chat box area, please? There they are. 45 is the next support level that we have. All right, we're just kind of a little bit of pressure here. The number came out, no, we're not too happy with it, at least not in the equity market. Bond market finally deciding to wake up a little bit and react to it. All right, Don. See what happens down there. All right, market continues to downtick here a little bit. Could you get short? We were looking to get short around about 60 to 64, anywhere in that range. Never got up there. Did get up to 57 and change. Did quick mention that maybe if we were going to do anything, we wanted to get shorter on the 58. Somebody asked me a question. They want to get long there. So if we're going to do anything, we want to get short there. And, market dipped down to 50 and popped back up. Looking at 45. At least it's like not going crazy one way like it yesterday did. It kind of just was annoying yesterday. But hey, it's okay. We got back on track. It's the only thing that matters. I will say that if you were trading late yesterday afternoon, the 67 worked beautiful. Just in case you were thinking I wasn't around. You know, it did finally give us a quick rotation off of that level. If you were, the moon is right. Oh, we're back to the moon, man. The moon man is telling me the moon is telling him trade is right. Wow. The moon man is back. All right. Well, we got down to 49 there and pop back up here. And coming back into this little quasi range that what they're in. All right there, Paul. Let's get it up there for you. And we're just kind of floating back to the top end of the range here. Very, very quiet. Nothing exciting going on. Patience is very important. Gotta wait for the opportunities to present themselves. We always like to have reasons to trade. So we're trying to find reasons to sometimes get into our tradeds, and sometimes we're looking for levels, sometimes we're looking for price action opportunities. It all depends on what is going on and what the market can give us. All right, I mean that's we are at the mercy of the market. Anybody have any questions, please feel free to put them down in the chat box area. We don't mind questions. I don't mind questions. Anything that we do here, some ideas or concepts that we're doing. We have a education course that we do offer to somebody who might be interested in learning the methodology and the ideas that we try to find here. These levels that we give out, plus the price action opportunities that we have, all are is a taught experience with some of the concepts in the market. Every day is a new day, and so we are always looking towards what could happen every day. Obviously, not every day is constant the same. It's a new challenge every day. We give you our levels as a guide to the day. We can add to them, subtract from them. We can delete some of them as the day goes on because of what the market is going to do or trade. And so all these things come into play here on any given day. So if you're new to trading, or if you if you have some ideas of, and you want to expand your horizons a little bit, add different concepts and ideas to your trading, that's what we're here to help. So again, if anybody is interested in any of this, and if you have any questions, feel free to ask them in the chat box area. Got no problem answering questions. Okay, we got a little resistance around the 60 to 64 area. Again, if you are so inclined or looking for something, green band coming in there, blue band coming in there. Did bounce off right here. I was looking for a little bit more. Yeah, just kind of a little range bound here, a little bit of pressure on the market, kind of staying a little below our green band, blue band area, but just inching up towards it. So kind of quiet today, not much going on, and which is fine. Can, you never know when things get busy and when they don't. Coming off here a little bit. Again, we had a little resistance, a little bit above that. Unfortunately, we did not get up there. Still support would be down at 45. This area right here, this area right here, we would classify probably as a no trade zone, only because kind of bouncing back and forth, could go higher, could go lower, just bouncing around. We don't know. So got to be a little bit patient here. We're always at the mercy of volatility, right? And that's part of the game. So number was released already, so we got nothing going on there, and now we just gotta see what is going to happen. Yeah, nothing might not happen. We might just be a range bound here. Who knows? If anybody has any questions, good time to ask. Put them in the chat box. We do like questions here. Especially when it's kind of slowish. And we are in the slowish stage. That is a 200-day moving average. Yes. Do big brokerage house firms use algos to trade the S&Ps? Well, I mean, I think there are some brokerage firms that don't trade at all. The ones who trade, like Goldman and those guys, probably have their own algorithms, for sure. I would have to venture to say. And they have their own trading people trading, whether they use algos or just traders. Who knows? Well, it's a good question there, Casey. It's one of those. How close to the blue band do you trade it? It's a individualized thing. There's no right answer or wrong answer. It all depends on how much a risk somebody wants to take. How you scale in, I guess, is your question. Would probably be, and that's a totally something that you have to assess for yourself. I can't really tell you what the optimal number is. It just depends, what you feel comfortable. Remember, at the end of the day, you have to feel comfortable in putting on a trade. That's the bottom line. So that you can trade, you can get in it, you can trade around it. You don't want to get into a trade and taking too much risk and you don't trade it correctly. So I would say find something that's comfortable for you, and then trade around that. Whatever you're going to say to yourself, this is how close to the blue band I'm going to trade. I think that's fair. I think that's something that'll keep you in the game, which is what we're trying to do here. So pick an area, or how you're going to scale in around the blue band, whether it be above or below it, and see how close you want to get to it. Stuff like that. We look to trade the blue band there, Raul. That's what we try to do. Um, that's just a Bollinger Band, but we found a reason for it to work for us. So as long as we find a way to use it and it works for us, then that's what we're trying to do. At least initially. We would have liked to get it a little bit closer there. Now it's a little bit more risky now if you're going to take it because of the way the price action was or is. Bond trade is a totally different animal. Unfortunately, I don't trade bonds like I used to anymore. I used to love trading bonds. Unfortunately, because of the interjection of the Fed into the bond market after the 2006 and all the stuff that they're still doing now, it's kind of hard for me to trade bonds. They don't trade well technically as well as they used to. So I don't trade them as much as I would like. Unfortunately, I use them to kind of maybe help us with the equity market with the S&Ps a little bit sometimes. And trade with myself. I should open a bond pit in my basement. Trade. I'll trade with myself. I can't lose. And like I said, this time around, it's a little bit more risky up here, so be a little bit careful if you are going to trade it. I would have liked to have gotten it the first time to it. Yeah, no, I'm not saying I don't. There's no conspiracy. It's the truth. The bond market doesn't trade well technically anymore. It used to bounce around. It just doesn't do that anymore. I don't think that's a conspiracy. I think that they've gotten involved with all the buybacks. That's no conspiracy. They're saying they are. They're basically running running that market. I don't think that's a conspiracy. Anything I'm saying is no conspiracy. All right, now the market is inching up here. Be a little bit careful if you're going to trade the blue band or green band just because of the way the price action was. I would look at, if you're looking for a little resistance, probably look at the our pivot area. Only if you're aggressive, you're going to take this little trade here. Maybe take it for less number of contracts so you don't get hurt too bad. I mean, there's different ways of taking a level that's a little bit more risky or a lot more risky. Well, sometimes you get inverse relationships going on between bond market and equities. Sometimes it helps one leads more than the other. Um, Sometimes, not all the time. So once in a while, when that happens, we can maybe get some information there from the bond market. But the long and short of it is, I traded in the bond pit for so long that I just got to have the bond market up there for me. And besides that, I do believe that the bond is the king. I mean, at the end of the day, bonds are king, and they will tell you exactly what's going to happen. I think it's how you interpret the move that's going to determine how you use the bond market. Okay, so we said here, be a little bit careful if you're going to sell it against the green band, blue band there because of the way the price action was. And as you can tell, it's upticking. And so we're looking at the better resistance would be around 64 area or pivot if you're going to take it. So that warning played itself out a little bit. And again, it made sense. The price action was telling you that probably wasn't going to work, and we needed to actually get that resistance area against our blue band when it got up to the 59 area earlier. It was hovering at 60, and that's where I had my order in there. So that didn't work out too well the first time we got there. But it's okay. So you cancel. The one good thing about trading is that you get to cancel trades. You don't have to keep them on because the price action was telling you something different. I'm not too familiar with the Keltner channel, so I couldn't answer that question for you. I don't usually. I don't have many indicators up, as you can see, and so it's not something that I would know about. Honestly, I'll be honest with you, I can't answer that question. The Bollinger Band, though, is kind of worked nicely for us. We've found a reason and a way to use it. And why it works or why it doesn't work doesn't matter to me as long as I find something that works. and it's been consistent and profitable for me. That's why I use it. But honestly, I don't know. I don't have. I don't. I'm not familiar with the. I've heard of it, but I'm not familiar with what the Keltner channels are or how they work. So I can't give you an answer there. But I will say I don't have too many indicators up. So we did bounce here, go right up to 63.5 area there, depending on if you scaled in around the 64 area. Maybe you got in at 63, 63.5, maybe. I don't know. We zoomed up to 63.50. Came back down here. Maybe you were able to jump in there just a little bit before. Get yourself a little bit of a scalp here against the 64 area. Now that we're in a new bar, I would be a little bit careful of that 64 if you have 64 straight up. Nicely rotated all the way back here after that little quick break that we had, and come back up here and retest our pivot. So it's kind of working to see what it wants to do up here. And again, we are at the mercy of volatility. Sometimes it goes up to 64 perfectly and comes off. We can say but we did get up to 63.5 and came off here. So again, are we wrong for saying there was some resistance at 64? I don't think so, because we're not going to be perfect, and hopefully, maybe, possibly, you were able to jump in there just a little bit before and get a little bit of a scalp here against it. Hopefully, maybe you got in, maybe you didn't. And if you didn't, that's okay. We'll see what the next opportunity is, right? Always an opportunity. Just be patient. Again, we are trying to find those areas that'll give us an opportunity to scalp the market. Ebbs and flows, that's what we're looking for. We don't do too well when the markets trend and go one way without giving us any retractions one way or the other. And so that's what we're trying to do here. We're looking for ebbs and flows. We don't cover the NASDAQ. I just don't cover the NASDAQ. I just stick with S&Ps here. They kind of do the same thing, maybe a little bit, even though they were off whack not too long ago when the NASDAQ was getting pummeled a little bit more than the S&Ps. But they move as well. But I just stick to one market and just trade that one. It gives me enough. I can make enough money or lose enough money in one market. I don't need to trade many of them. Sometimes I get I've had different positions in different markets and I get a little confused. So I try to stay very simple here. We try to keep it very straightforward. But hey, I know a lot of people, a lot of traders who got 3, 4, 5 screens, got 4 or 5 different positions on. Knock your socks off. That's all the power to you. If you could do that, awesome. I have enough trouble trying to figure out what's going on in this market. It's hard to focus in on every market when you're not completely there. Because even when I'm completely here in this market, I tend to not know what's happening. All right, so again, the 64 because it got up to three and change. Not if you were looking at 64 as a sell, obviously we didn't get there, but we did get close enough to it. So if you're looking for 64 as a sell, probably not the best. I would probably not have that in there because we did just miss it by just that much if you didn't get in earlier. So now we really the next good resistance would be up at around 72. Again, if anybody has any questions, please feel free to ask them in the chat box area. We put out our levels when the market opened up. If we can repeat the levels in the chat box area, those are the levels we're going to use for the whole day, and we could add, subtract to them. We could adjust them. It all depends on the price action and the opportunities that the market can present itself to us. So we are absolutely at the mercy of volatility in the market price action. So anything we say here is kind of related to what the market is kind of telling us. And anything that I say or additions or subtractions to any trades that I'm talking about is taught. We try to have you make those determinations on your own. At the end of the day, that's what we're trying to do is give you reasons to trade. How do I hold trades overnight? Well, I mean, that's not really good to my sleeping habits if I do that, though. and I do like my sleep, so I try to kind of stay away from that. And you know, look, it used to be that people, you have access right now to a trading platform for almost 24 hours in a day, so you can obviously trade it with stops and the ability to manage it overnight if that's what you're into. But again, I do. If I had a position on, I'd probably be, worried about it, considering it. I'd go down to my basement and check it out, maybe adjust my stop, and you know, that's not my cup of tea. I'd rather just, sleep my 6 hours a day, a night, and be done with it. Come back in the morning. Got plenty of time to trade. It used to be that somebody used to say, a very, one of my mentors when I was trading, and you have to remember that we couldn't trade overnight. I mean, there was no 24-hour trading. When I started out, we used to stop trading at 2 o'clock and in the bond market, and pretty much that was it. Then they started trading at night, and they started trading. Then electronic trading started. So everything evolved. But there used to, before all that happened, there used to be, one of my traders that I looked up to said, "Why would you trade at night? Unless you're going to have a life-changing trade, which means you're either going to make $1 million or lose $1 million. There ain't no reason to put on a trade at night." And that was his theory. But he had to trade at night because he would, that's what he would do. He was just that kind of trader. But point is that, and that's where I got it from, basically, is that unless you're going to have a life-changing trade on, but again, that doesn't happen anymore these days, because one is people, control how many contracts you trade, and it used to be a totally different situation. The controls were not as stringent as they are now, but unless you're going to take 1,000 lot home and hope it opens up or down before your firm found out about it, and they used to also call that the O'Hare trade, where a trader would put on a trade, and you could do it on the floor even. You put on a big position on the floor before your firm found out about it, because by the time they took the cards upstairs and then they processed everything, and by the time your position was known to everybody, you were at O'Hare, and either the market went up your way or went down your way, and you either made a whole bunch or you were on the plane taking off someplace and nobody could catch you. So I used to call that the O'Hare trade. Again, it's a lot tougher to do any of these kind of trades anymore, because simply because it's just not, the world is different than it used to be, and it's much harder to do any of this stuff right now than it was a while ago. So yeah, as far as my sleep is concerned, or do I take any positions overnight? No, that's not happening. I mean, I would say that if I'm going to do anything, I would say that if I wanted to trade a level, I could do that. It would have to be one of my further levels away, and I would have to probably put about a 10-point stop in something. So I mean, if you're going to go that route, you have to extend your stops a whole bunch because it's very thin. There's a lot of slippage that goes on at night. So, and yeah, but that's if you pressed me to take a position or trade overnight, that's how I would do it. But otherwise, that's okay. I let somebody else do it for me. All right, we've market's trying to inch its way up here. Did trying to bounce off of our 74 again. It was a little risky, like I said, but just like the blue band before, you can adjust how much risk you want to take at a certain level by lowering your contract size, something like that. If you really wanted to take the trade and give yourself a chance at it. But if you did that on the blue band and now you did it here, you're kind of even on the day because it worked, and so it's why even do it at all, right? And that way you're save yourself some commissions and wait for the good opportunity to trade. That's all I'm saying. All right, things kind of quiet today, not as moving around as it was yesterday. We are finding our opportunities, trying to find our opportunities, and again, it all depends on how you entered your trade and if you were going to take advantage of a level and how you scaled into them, if you did or didn't take some of these trades that we talked about. But that makes sense. I mean, in every situation, in every trade, it's basically how you get into them and how you get out of them. And everybody here is unique in their own way. Uh, nobody trades the same way. Everybody trades with different risk tolerances. What you're looking for and what you're not looking for, as far as getting into trades and getting out of them. And so that's what we are. Everybody's a little bit different. So some people took some trades that maybe I didn't take, and maybe I took trades that somebody else wouldn't take. And there's not to say that one person is right over the other or wrong over the other. It just means that they have different risk tolerances, and that's how they got in and out of their trades. And then the market just kind of today anyway, just kind of resting after yesterday's nice little rally. We had support down at the 45 area, and we only drifted down to 49 and change, and came back up. And again, if you did trade our pivot here, you did okay. The settlement price there was 475. Maybe you got in there and traded that little area, first rotation to it. Maybe that was a little opportunity that you appreciated. But we did, trade off. We traded down this morning. If you just used our levels, we did all right on the second level. The first level kind of ran us over, but we had our stops in, and you were able to make your money back on that. We had a couple price action opportunities that occurred as well. Again, it all depends on how aggressive you were as far as your entry points into the trades or not. So that's kind of what we've done here today so far. And again, we kind of focus more on the morning hours to give us our good opportunities to trade. The afternoon trade becomes a lot more sticky. I don't know if that's a trading terminology or not, but the volatility is less and the volume is less. It's more one-way trade. There's less traders trading, and it becomes a little bit more tougher to trade as far as scalping is concerned. If I do anything if I'm doing anything in the afternoon, it's probably just trading the levels and putting my stops in there. Price action becomes a little bit more, it also trades differently as compared to the morning hours. As long as we understand that, and as long as you understand that and trade accordingly, then it's okay. So, but obviously you need to be aware of the situation and be aware of what's happening in the market when it's there or when it's happening, for you to be careful or not. And again, everybody has different risk tolerances. So if I wouldn't trade, or if I'm not trading at that particular moment in time, that's up to me. It's maybe somebody else wants to trade, right? It's just the way it is. So again, if anybody has any questions, good time to ask, as we're coming here to the end of the morning session for us. And after yesterday, I need a break. Yesterday was a little rough for us, for those of you who were with us. And I'll be the first to admit it was a little rough for us. But if anybody tells you this game's easy, it ain't. Just putting it out there. It ain't easy. Well, that's good. That means you actually listened and got yourself a nice drink yesterday. That's funny. All right, so we're hanging around our pivot here, trying to decide which way it wants to go. And so we're back pretty much neutral over here in this little area here. Not surprising. Yes, Mark is the culprit that trades the blue band. No, he doesn't. No, no, he not only the blue band. He trades. He no, he trades other levels as well. He just likes to. He fell in love with it. All right, we're upticking here. Next level of resistance we have is up at the 72 area. Now I get back here in a bit. All right, we took a little bit of a break here. We did rotate down to the our blue band area there. Maybe if you did venture to get along there against that little area down at the 61 ish. Next level of resistance we have is up at 72. So if anybody has any questions, you should ask them now. We're going to take a little bit of a break here as we come to the end of our morning session. We had a couple nice trades there for us that we had our levels. There's the next level on the upside we have here is 72 and then 79. And as long as we stay above 58, might be a little bit bullish. Bonds are tanking now. Maybe that's giving a little rotation to the upside there in the S&Ps. Don't know. But we're still in a very tight range nonetheless. So if anybody has any questions, good time to ask right now. Put them in the chat box area. I can see your questions. If it, let's say, goes against us, maybe Carlos, you can ask a question in the chat box area. No reason to raise your hand. Just go to the chat box area and leave any question or anything that you might want to ask in there. I guess maybe you would look at it as if, let's say, you almost got stopped out and it comes back and it's like scratchable. Maybe you take your scratch instead of, almost taking your loss, something like that. You don't like the way it's reacting around the level. Maybe you can do that. There's no, there's nothing wrong with taking a scratch, even if you take the scratch and you end up making a trade would have been a winner. It doesn't matter. You had a reason to take a scratch. The market didn't give us the reaction we're looking for when it got to a level. Maybe you almost took your loss and it came back and said, you know what, here, I'm going to give you a chance to get out. So you get out. Is there any, moment in time where you have to say, you have to do one thing or the other? Not really. And to invest in futures trading, are you using margin accounts to make the trade or paying the cost of the trade? No, nobody is paying the cost of the trade. You are definitely paying. You're definitely using margin. The advantage of trading futures is a great opportunity to hedge against for a little amount of money. And that's the advantage of advantage of futures trading. Nobody's going to make you like each bond contract is $100,000. Nobody's going to tell you to pay $100,000 to trade a futures contract. And now, if you're going to wanted to take it to expire, then it's yours. Then you have to pay for it. But the advantage of trading futures is to be able to get a big bang for your money. And so you would never pay for the cost of the trade. That's not do. That doesn't make it doesn't. That's not do. Most people don't. I'd say 99.9% of people don't do that. I mean, the only ones who are actually, using the ones who are using the market as a hedge, then they are obviously in there till the contract expires, and at that point you have to pay for the futures contract, or whatever it is. Yeah, no problem. Yeah, I mean, that's a beauty of futures trading. Really, is the fact that you can get a big bang for your money for a small amount. But of course, the markets do move around. So if you're wrong, it's going to cost you no matter what. So you got to look at it like this: each tick, which means each from 4165 here to 4166, 4165.75 to 4166 is $12.50 each tick. And each one of those price fluctuations, and that's how that's what you're looking at as far as your cost. And then obviously the margin it costs you to have one contract on. And that varies with the brokerage house that you are with. So that also is another factor into what the brokerage house are you with, and how much they're going to charge you for each contract that you trade. So all these things are factors that you have to consider. Each tick movement in the S&Ps is $12.50. Each tick movement in the bond market is 31 and a quarter. Bond market is the contract to the left. Each tick in the mini S&Ps here is 12.50. So each point from 65 to 66 is $50. Hello there, Raj. Yeah, we are not here all day. We traded a lot in our morning. We traded mini S&Ps. We focus on the morning trade more than we do the afternoon trade. The afternoon trade gets a little bit more less volatile, less movement, less opportunity to make some money trading S&Ps. So most of our trades and most of our room is focused more in the morning hours to trade, which is coming to an end fairly soon. Saying, given that though, there's always an opportunity to trade no matter what. But the trade in the afternoon gets a little bit more sticky. It doesn't trade as well technically, and there's more one-way trade than there is anything else. But that's what we are doing here on an everyday basis. So if you any interest in trading, we did take some trades today. We have our levels that we gave out this morning, which I can repeat to you. Oh, they're right there. If you look at the chat, what are you doing here? If you look at the chat box area, they're right there right now. Those are the levels that we gave out this morning prior to the opening. We use those as a guide to help us trade and use the market to give us opportunities to find those inflection points, because we don't believe those markets go straight up or straight down. And so these are the levels that we think that will give us an opportunity to scalp the market for 2 to 3 points on our trades. We had the first couple levels on the downside that got triggered. The 52 level worked very nicely for us, and the 58 not so much so. And then we had another couple price action opportunities that occurred if you were trading with us, with some of the things that we'd like to teach in our education course. And right now we're just kind of hovering around our pivot, so really not too excited here. Next level of resistance we have is up at 72. Otherwise, this area right now gets a little bit more quiet with a lot less volume and a lot less activity. So we're not too excited about trading this little area here. Maybe something will happen, maybe it won't, I don't know. But the next level we have on the upside of some resistance is the 72 area, and that's what we'll be looking for. If you want to just get long, as you can stay long, I think anything as long as we stay above 58. So we took a buy at 58, and we also took a buy at 52. and we got stopped out. Blue band is something that we like to keep us on the right side of the market. So you might have bought the 62 area here on this little dip a little earlier. Again, it all depends on, you know, some of the opportunities here depend on each individual because each individual has different risk tolerances and how they recognize a trade and then how you implement them. Both of those, all of these concepts and ideas are individualized for individualized people's uh, risk tolerance. Yes, we don't use indicators. We feel that they're laggers. We kind of like to use price action on any given day. Obviously, some price action sometimes a little bit more volatile than other days, but price action is the one constant that is not a lagger, obviously. So that's what we're kind of uh, looking at. 50 and 200, yeah. It can't tell us which way the market is moving, but it can get you out of a trade early sometimes if it's if you can see that it's not, or it gets you, it tells you not to get into a trade sometimes. Well, I mean, obviously, support and resistance levels are what they are. We would be buying support levels and getting out of and getting selling resistance levels. We are scalping the market, so we are trying to find the area around which those levels we would, if you're buying them, supporting them, we would buy, and then we would try to take 2 to 3 points on these levels against these levels that we have. And likewise on the sell side, sometimes we can use them as a target if we find a reason to get short or long going into a level, and that sometimes occurs depending on the price action as well. Sometimes the price action will give us an opportunity to get a position into one of these support or resistance areas, and then we use them as targets. So either we get to them first without any position on, or if we use them as on a setup to either get in short or get in long, depending on if it's a resistance level or support area. We find these levels every day. Obviously, we do them independently. It's the work that we do here, and we have we put them together in the morning before the market opens up and share them with everybody. And then, like I said earlier, we sometimes add to them, subtract from them. They're all kind of different depending on the day. All right, as you can tell here, they kind of took the volatility out of the market today, at least for the time being. So we just have to be patient here, trading on at our pivot. So very neutral, nothing to get too excited about. We just kind of could go either way from this level right in here. So again, probably not much going to happen. I don't know. You never know when they're going to release some news or something hits the market. So no. We use our stops. We have a 2 point target, 2 to 3 point targets. If we get in and you can trade multiple contracts, you can probably take a little bit more out of those opportunities if the market presents itself. But we are always using stops. We that's not it's a 2 to 3 point stops as well. Never. This is futures trading. You have to use stops. So I would never tell you not to use a stop. That doesn't make any sense. So 2 to 3 point stops in addition to the 2 to 3 point profit targets. And we like to get about 4 to 5 trades in the course of a day. Sometimes we get those easily, sometimes not. Like maybe today we didn't have so many. Yesterday we had a lot. So kind of averaged itself out a little bit. But we never know how busy we're going to be in any given day. So, and like I said, again, we're right here at our pivot. So very neutral. I have no really good opinion. So we're going to take I'm going to take a break now and we'll see what happens, but be very careful. Got 72 above, some resistance. And if we get below 58 and we close below 58, you don't want to be long anymore if you're looking to get long someplace. Otherwise, use the next level down below, which is, it could go retest to 49, but I would use 45 as a better support area if the market decides to do something. I would get back in a bit.
Yeah, it's funny. I was on the wrong one. How did that sound?